Hello there, in Lecture Series 13 of Bite-Sized Corporate Reporting, I'll look at IFRS 5 non-current assets held for sale and discontinued operations. This is a two-part lecture series. IFRS 5 states an entity shall classify a non-current asset or disposal group as held for sale if its carrying amount will be recovered principally through a sale transaction rather than through continuing use. This means an entity shall not classify as held for sale a non-current asset or disposal group that is abandoned or wound down gradually, as the carrying amount will not be recovered through a sale transaction. According to IFRS 5, for a non-current asset or disposal group to be classified as held for sale, firstly, it must be available for immediate sale in its present condition, subject to terms that are usual and customary for such assets. Thus, if the entity has to carry out further works or repairs, this is an indication the asset is not available for sale in its present condition. Secondly, the sale must be highly probable. For the sale to be highly probable, 1. Management must be committed to the plan to sell the asset or disposal group. 2. There is an active program to locate a buyer. 3. The asset or disposal group must be actively marketed at a reasonable price in relation to its current fair value. 4. The sale is expected to be completed within 1 year of classification as held for sale. Finally, it is unlikely the plan will change significantly or be withdrawn. In the case where shareholders' approval is necessary, the probability of approval should be considered as part of the assessment of whether the sale is highly probable. IFRS 5 stipulates a non-current asset or disposal group classified as held for sale shall be measured at the lower of its carrying amount and fair value less cost to sell. If the fair value less cost to sell is less than the carrying amount, an impairment loss shall be recognized. In the event of any subsequent increase in fair value less cost to sell, a gain representing a reversal of the impairment loss shall be recognized. However, the gain shall not exceed the cumulative impairment loss that has been recognized under IFRS 5 and that previously recognized under IAS 36, impairment of assets. If an entity has adopted the revaluation model for its non-current assets, then immediately prior to initial classification as held for sale, the asset shall be revalued to fair value. Thus, upon classification as held for sale, the cost to sell representing the difference between the carrying amount and the fair value less cost to sell shall be recognized as an impairment loss. Depreciation or amortization of non-current assets that are normally subject to depreciation or amortization under the relevant standards prior to classification as held for sale shall cease upon classification, as depreciation and amortization is related to usage and the carrying value of non-current assets held for sale will be recovered through a sale transaction rather than continuing use. Please note, the measurement principle of IFRS 5 does not apply to the following, either as individual assets or part of a disposal group, but shall be measured according to the measurement principles of the associated standards. 1. Deferred tax assets shall be measured in accordance to IAS 12. 2. Assets arising from employee benefits shall be measured according to IAS 19. 3. Financial assets shall be measured in accordance with IFRS 9. 4. Investment property and biological assets measured at fair value shall be measured according to the fair value model of IAS 40 and IAS 41 respectively. 5. Insurance contracts shall be measured in accordance with IFRS 17. The next part of Lecture Series 13 on IFRS 5 non-current assets held for sale and discontinued operations will cover further on the measurement principles of non-current assets held for sale, changes to a plan to sell, and discontinued operations. Till then, thank you and have a nice day.